Today, we're taking a deep dive into GFL Environmental. You know, they're the fourth largest trash hauler in North America. And in early 2025, they did something massive. They sold off a huge chunk of their business for a cool $8 billion. So we're going to unpack what that huge strategic shift really means for the company, for its future, and most importantly, for any investor watching.
All right, so here's how we're going to break it all down. First, we'll look at the big shakeup itself. Then, we'll see what this new, leaner GFL actually looks like. After that, we'll get into their new game plan for growth, tackle that big question about its stock price, and finally, wrap it all up with the bottom line for you, the investor.
Okay, first things first, the transformation. See, to really get where GFL is headed, you have to know what it was before. And honestly, it was kind of this sprawling, complicated company that was carrying a lot of debt. And for anyone looking to invest, that mix of complexity and debt, well, it created a whole lot of uncertainty.
So GFL basically went from juggling two different businesses, solid waste and environmental services, to being a pure-play solid waste company. Now, from an investor's point of view, this is a huge deal. It just simplifies the entire story and makes the company so much easier to understand and analyze, and it gets rid of the unpredictable earnings that came from that more cyclical environmental side of things.
You know what's really wild is just how fast this all happened. They announced it in January 2025, and by March 1st, the deal was done. That one single transaction was the catalyst, the big bang, that completely reset the company's strategy and its entire financial foundation.
Now let's just zoom in on this number for a second, 4.7x. That was their leverage ratio before the sale. To put it simply, their total debt was almost 5 times their annual earnings. That is a really heavy backpack to be carrying around, and it can seriously limit your options and, frankly, make investors pretty nervous.
And here is the beautiful result of that big sale. By taking that cash and paying down debt, GFL is now aiming for a leverage ratio in the low 3s. Now, this isn't just some number on a spreadsheet. A drop like that fundamentally de-risks the entire company. It means lower interest payments and, you guessed it, more cash freed up for growth and for shareholder returns.
So the balance sheet is cleaned up, the story is simpler. What are we left with? What does this new GFL actually look like now that it's a focused, pure-play powerhouse?
What you're seeing here is a really well-oiled machine. The money's coming in from all the right places: commercial, residential, industrial customers. But the really critical part? They also own the high-margin stuff downstream, you know, the landfills and transfer stations. That means they get to capture more profit from every single ton of trash they pick up.
Now this tells a story of both scale and opportunity. At a $17 billion market cap, GFL is absolutely a major player, the fourth largest. But just look at that gap between them and the two giants, Waste Management and Republic Services. For an investor, a gap like that screams one thing: a massive runway for growth. Which brings us right to the future. So how exactly is GFL planning to close that gap and chase down the big guys? Let's get into their new 3-part growth engine.
It's really a mix of the tried and true and the brand new. So first, they're going to keep doing what the waste industry does best: raising prices faster than inflation. Second, with all that new financial firepower, they can get back to making smart, smaller acquisitions. And third, and this is the exciting part, they have this powerful new growth driver: sustainability.
And this is where GFL really starts to stand out. They're actually turning environmental regulations into major profit centers. They're grabbing methane from their landfills to create renewable natural gas, and they're managing recycling programs for big producers. I mean, these aren't just little side projects. We're talking about hundreds of millions in high-margin earnings on the horizon.
And you just have to look at this quote from management. It says it all. When a company's leadership team says these new green projects offer the best returns they've seen in decades, well, that's when investors really lean in and listen. It's a huge signal that this is about creating serious value.
So let's recap. We've got a de-risked company with a simplified story and a better growth profile. And that brings us to the million-dollar question for any investor. Why doesn't the stock price seem to reflect all that? I mean, this table lays it out in black and white. GFL is trading at a valuation of around 16 times its earnings. That's basically the same as its bigger, slower-growing competitors, and it's a massive discount to a company like Waste Connections. Put simply, the market isn't giving GFL credit for being the growth company it's trying to become. And that really is the question at the absolute heart of this whole investment thesis. If the old reasons for the discount, the high debt,
the complexity, if those are gone, what's holding the stock back?
It really boils down to what we call a classic show-me story. The market is still a bit skeptical. Investors are basically folding their arms and saying, okay, that's a great story you're telling us, but now you have to prove it. Show me you can actually do it. They're waiting for GFL to deliver on those promises. And you know what? That very skepticism is what creates the potential opportunity.
So, let's pull all these threads together. What's the final takeaway for anyone thinking about putting their money into this transformed trash titan?
The opportunity here looks pretty clear, but let's be honest, it's not a sure thing. GFL still has to prove it can fold in new acquisitions smoothly and hit those profitability goals. And yeah, the business is pretty stable, but a big recession could still ding their industrial waste volumes. Investors should also keep an eye on its ESG risk score, which is a bit higher than its peers.
And so that leaves us right here with the central debate. GFL has pulled off a fundamental transformation. They've created a simpler, stronger, and faster-growing company. The market seems to like it, but maybe not enough. The ultimate question you have to ask yourself is, do you believe this show-me story is going to have a happy ending, and will the market finally wake up and close that valuation gap?